Hello, in this lecture we're going to continue with some short problems. These are the types of problems that could be in a multiple choice format, and they are smaller, which means we have less information generally. So we want to get more information or look at the bigger picture oftentimes if we can when we work these types of problems. So we have a company received $700 utility bill for the current month's electricity. It is not due until the end of the next month, which is when they intend to pay it. Which of the following journal entries will be made? So when working these problems, again, if you have a trial balance open or the book or any kind of resources, I suggest having a trial balance or at least practicing with one so that you can see the problem. So I'm going to pull this on this side and show this trial balance over here. And this will give us the journal, the entries and the chart of accounts, I should say, assets, liabilities, equity, income and expense. And we know that assets are in green and they generally have debit balances represented by the fact that they do not have brackets around them. Again, this isn't related to this problem, but it's going to help us to just have a cheat sheet in front of us. All right, so then we're going to say the utility bill was received. So I'm going to say, is cash affected? And the answer here is no, it's not affected. We got the utility bill, but we didn't pay it yet. We're going to pay it next month. So we want to record it, but not to pay it. So how are we going to record it? Well, utilities, that's going to be an expense generally. So we have an expense. Expenses are debit balance accounts, and they usually only go one way. They go up in the debit direction. So we're going to debit utilities expense. So I'm going to debit utilities expense for the 720. And this is, of course, the debit side and the credit side. That means we're going to credit something. I'm going to make the credits a negative just to represent a bracketed number. You don't have to do that. And what are we going to credit if it's not cash? Well, we're going to pay it in the future. So it's going to be a payable of some kind. Mainly, most likely, accounts payable. So accounts payable has a credit, it's a liability, and it has a credit balance represented by the brackets in this case. And therefore, we're going to make it go up by doing the same thing to it and crediting it. So note that we could have had a multiple choice question asking for just half the journal entry, and they would just give you half of it. And we could, and if they do that, you want to write the entire journal entry out so that you can pick the right half and not get mixed up and go backwards. They could ask you the question of what's going to be the effect on net income. And note that we have an expense here, so net income is going to go down. They could say, what's the effect on liabilities? What's the effect on the accounting equation? All these questions, if we can write out the entire journal entry and then have a cheat sheet somewhat like a trial balance or have that idea in our head, then that's the way we can answer all those questions. So you want to make the answer as complete as possible and then go through the multiple choices usually. Next question says that the owner started the business by investing $49,000 cash. Identify the journal entry below, record the transaction. So we want a transaction for this, and so that means that we're going to ask our questions here. I'm going to say, is cash affected? And yes, in this case, the business got more cash. So cash is a debit balance. We're going to make it go up by doing the same thing to it, which in this case will be another debit. So we're going to have our debits and credits again. And you want to write this out. I would actually write out the 49,000 debit, and then we're going to credit something. I'm going to represent it with brackets and a negative. And what are we going to credit? Well, who put it in there? The owner. And again, if we have our trial balance, we can say, owner type account. How about owner's equity? In the equity section, we can see that it has a credit balance, and we need to make it go up because the company owes the owner more money. Therefore, we're going to do the same thing to it, which in this case would be a credit. So again, I want to write the entire journal entry out, even if the multiple choice question only asks for what account would be debited or what account would be credited, because if you write the entire journal entry out, it's far less likely that you're going to get out of whack by getting the debit and credit backwards. Also, they could ask for something like, what's the effect on net income if you have this type of journal entry? Notice that'd be kind of a trick question because there's no effect on net income, even though cash is affected, because neither of these accounts are either an income or expense type account. Next one says we got a 160 credit to supplies was credited to fees earned by mistake. So we have an error that was made. By what amounts are the accounts under or overstated? So we got to see what happened and what should have happened, and then how this affected the transaction. Is it overstated or understated? So I'm going to list the accounts here. We've got the accounts that we're talking about are supplies and fees earned. They didn't give us the whole journal entry. They only gave us those two things. And so we're going to have to take those two things and see what happened. Again, if they gave us the whole journal entry subways, that might have been easier. We don't know exactly what the journal entry is for, what the purpose was. We just know that there was an error on these two accounts. So what we need to think about is what should have happened and what did happen. And then we can think about whether it's over or understated. So I'm going to go ahead and take these headers and I'm going to wrap the text by going to the alignment, wrap text, and center those. That's one way we can change the headers if we need to. So first, supplies. They say we had 160 credit to supplies was credited to fees earned. So what are they saying then? They're saying that supplies should have been credited, and it wasn't credited. So supplies should have been credited, and so I can even say it should have been credit, and then what did happen? No change. And then we can think about, well, what would that have done? What would have happened if we credited supplies? Well, supplies, we can see over here, has a debit balance by the fact that it has no brackets around it. And if we credit something that has a debit balance, we're doing the opposite thing to it, and we made it go down. So what should have happened is it should have gone down. It's because the credit should have gone to supplies, and it did not. If we had credited to supplies, it would have decreased the supplies. What did happen? No change. So if supplies should have been going down and it didn't, then is it over or understated? And it's going to be overstated. It's overstated because it should have been decreased and it wasn't. Therefore, it currently is overstated. Okay, so let's think about fees earned then. The fees earned, the 160 credit to supplies was credited to fees earned. So what should have happened? No change. It shouldn't have been going to fees earned. What did happen? It was credited. Okay, so fees earned got credited. So what should have happened? Should have had no change, which means it wouldn't have gone up or down. What did happen? It got credited. Well, what does that do to fees earned? Does it make it go up or down? Well, fees earned has a credit balance in it, and we know that if we credit something with a credit balance, it's doing the same thing. We'll make it go up. So what did happen? Went up. So if fees earned went up and it should not have, then it's higher than it should have been, and therefore it's overstated. So you can see how these can get kind of confusing when you think through them. So you want to kind of think through them and then look at the multiple choice answer and see if you find the one that ties out. If you just start looking at multiple choice answers and they're overstated, understated, then it can be a little confusing. Next one says that we have a 34 credit to sales was posted as 340. By what amount is the sales account in error? So we can see here that this is something that the double entry accounting system won't catch, because if we have the debit and credit that are off by the same amount, it won't be caught by the double entry accounting system, even though there's an error. Now, bank reconciliation or something will catch it maybe, down the line. It's not like we don't have other check figures, but this is an error that's not caught by the double entry accounting system alone. So once again, I would think about what should have happened versus what did happen. And then we'll take a look at the difference in this case. So what should have happened versus what did happen. What should have happened? We should have credited the sales account. Should have been credited for $34. What did happen? We credited it for $340. Therefore, we have a difference, of course, of the $340 minus the $34 of $306. So it should have been a credit in both cases. And of course, what does a credit do to sales? Well, sales is down here. It's a revenue, income, sales, all type of income accounts has a credit balance. If we credit it, we're making it go up. So it's going up in both cases. Therefore, it should have gone up by 34, and we did go up by 340. Therefore, it's overstated. The difference is overstated. Or sales is too high by the 306. Sales is too high by the 306, therefore it's overstated. Next one says, during the month of February, company had a cash receipt of $8,000 and disbursements of $9,600. The February 28th cash balance was $2,800. What was the February 1st beginning balance? So this is one where they're going to try to have us back into a number again, and we're doing it a little bit backwards than we might do it normally. And of course, that's the nature of a multiple choice question, is in that we often are going to do things a little bit differently to test the knowledge, even though it's not exactly what the order we might do it normally in the process. So it's good for test knowledge, but it's kind of reversed order to what actually happens a lot of times. So in this case, one way to approach this is to have a T account for cash. We can have debits and credits. So this is the T account for cash. I'm just going to center this. All right, and then I'm going to underline it just so it looks like a T. So it looks like our T account. Don't have to do this, but you know, it makes it look like a T, which is nice. So we're just putting some borders on it. Now, what we don't have is the beginning number. So that's the tricky thing. This is our unknown. This is X in this case. I'm going to make it green like that. And what we do know is that we had receipts. So what does that do to cash? What does a receipt do to cash? Well, cash has a debit balance. We're going to make it go up by doing the same thing, which in this case would be a debit. So we know that receipts went up by 8,000. And then we had disbursements. I'm just going to call it that. And disbursements are things going out. Cash is a debit balance. We're going to make it go out. So we're going to do the opposite thing in here, which is going to be a negative. I'm going to put it as a negative or a credit of 9,600. And then the ending balance. So they're going to give us what the ending balance is, which is the total debits minus the total credits. So the ending balance is, it's going to have to be a debit. Why? Because it's always a debit. The debits always win. It's a cash account of 2,800. So this is the ending balance here. So I'm going to just underline that and say they gave us the ending balance number. So the problem here is then this X plus this plus the debits minus the credits equals that. That's our equation. So we got to figure out what this needs to be in order for it to be increased by 8,000 minus the 9,600 needs to equal the 8,002. Now this is one that's almost easier sometimes to just write out. So I'm going to write it down in Excel. I'm going to make this a bit larger over here. We're going to put our equation here. So we're going to say X. So I'm going to start with X, of course. And that's going to be this number here plus the 8,000 minus the credit of 9,600 has got to equal, and then it's going to equal the balance of 2,800. So there's our equation. I'll make this a bit larger here, and I'll make these a bit smaller so we can see this. All right, so now we got to solve for this. So we have X on this side. We've got an 8,000 minus the 9,600 on the same side. So if we do that, obviously in a calculator, we're going to come up with a negative number. So we're going to say, all right, well, ooh, that's awfully large. We've got 8,000 minus 9,600, and that's going to be a negative 1,006. So we can write that a couple different ways. I could say X plus a negative 1,006, or we can say X minus 1,006. So I'm going to say X minus 1,006. So we're going to say X minus 1,006. Why? Because we said it's a positive 8,000 minus the 6,900, and that will give us that 1,006. So I'm gonna do it this way: 9,600 minus 8,000. It's 1,006 with a negative. It's a negative 1,006. All right. So then we're gonna say this equals, and then of course we're just gonna say that's the 2,800. Now we have an 1,600, and it's a negative. So a negative 1,600. We got to get rid of that. Therefore, we're going to add 1,600 to both sides, right? That's our process here, 1,600 and 1,600. And so that means that we now have, put it down here, X, and we could say minus this, X minus 0 equals, and then we're going to have the 2,800 plus the 1,600. The 4,400, and that means then that X equals the 4,400. So that's our equation. Now, if we plug that in here, we're going to say, okay, does that work? Let's check it out. We've got to double check our work here. That's always important. And then we're going to underline, and we're going to sum this up. This equals the sum of the debits. So the 4,400 plus the 8, the debits, and then sum up the credits. I'm going to sum up the entire column, even though there's only one number. 9,600, and then how much are the debits winning by? Hopefully 2,008. This minus this plus the negative, is going to give us 2.8. So we can double check our work on that. All right, the next one, I'm going to pull this back over here so we can see our trial balance. It says the credit purchase of new oven for $5,000 was posted to kitchen equipment as $5,000 debit and accounts payable as $5,000 debit. What effect would this error have on the trial balance? Now, first we got to find the error, and if we read that fast, we might not even see what the error was. So let's post a journal entry. We could say what should have happened versus what did happen. Now they give us the entire journal entry this time, so we can see debit, credit. This is what they're telling us that happened. They're saying that we purchased equipment, so we put it in equipment. And that was going. They said we debited it for $5,000, and we're going to credit something. I'm going to represent the credit with a negative here. We credited something, or we should have credited something. They said that accounts payable. I'm just going to put accounts payable. What did happen? $5,000 was debited. So if you write it out, then you can kind of see what the error is, and obviously we don't have any credits here. That's a problem. What should have happened? Well, equipment looks right. That was a debit of $5,000. Why is that right? Because if we had equipment over here, it's a debit of $5,000. I mean, it's a debit balance represented by the fact that it doesn't have brackets, and we should make it go up by doing the same thing to it, which is another debit. We should then credit something. The credit needs to go to something. That credit should have been going to accounts payable. So that's what should have happened. Now, if they give us the answer on that, what's going to be the error? There'll be an error in that there'll be two debits. The debits will not equal the credit. Our double entry accounting system will not be in balance. And the assets will be correct, but the liabilities are going to be they're basically out of balance by $10,000. Why? Because it should have been credited by $5,000. And instead of increasing it, we decreased it. We decreased the accounts payable by doing the opposite thing to it. Accounts payable is a credit balance. We should have made it go up with a credit of $5,000, and instead we made it go down by the $5,000. Next one, we got a bit longer problem. We have the company opened on March 1st of the current year. During March, the following transaction occurred and were recorded in the company's books. I'm going to skip down here to the bottom now and look what they want first, and then I'm going to go back in and read all the transactions that happened. So based on this information, the balance in the capital reported on the statement of owner's equity at the end of March would be. So we're focusing in on owner's equity. So instead of writing out the journal entries here, which might be good practice, but we're just going to focus on the equity account. Look at all the journal entries and focus on what would happen to the equity account. How can we do that? We can have a T account, owner's equity. And of course, by the end of the time period, once we close out everything, then the owner's equity will be the ending balance in the capital account. So we're basically looking at the equity account or the capital account. And if we look at our trial balance over here, everything over here basically in blue, or except the income summary is a clearing account, but these two are going to be equity accounts. And once it gets closing out, draws will be closed out to the owner's capital account. So we can think about anything that's going to affect basically those accounts there. So I'm going to center this, and I'm going to make it look more like our T account so that we can work through that. And then we're going to have our debits here and our credits. And we can make that into a T looking thing by doing this and underlining that. And then we make the left hand side here of the T, and there we have it. Okay, so the owner invested $30,000 cash in the business. So what's going to happen if the owner puts in cash? Well, the journal entry is going to be a debit to cash. Cash is going to be debited, and then the credit, who put it in? The owner equity put it in. That's where the credit is going to be. Now, owner's equity has a credit balance. We're going to increase it by doing the same thing to it, which in this case would be another credit. So I'm going to make the credits with a negative here, just because that's what I typically do, and that's 30,000, not 3,000. Get us off to the right start here. So then the second one said owner contributed 105 of equipment to the business. All right, so what's going to be the journal entry there? Well, equipment, we can see here as a debit balance. We're going to make it go up by doing the same thing to it. We're going to debit it in the journal entry, and then we're going to credit, once again, who put it in there? The owner. The owner put it in there, therefore we're going to credit owner's equity, the capital account again. So this, what we care about in the T account, of course, is the capital account, 105,000. And then the company paid $2,500 cash to rent office space for the month. Paid $2,500 in cash. So as cash affected, cash is going down, we're going to credit cash, and we're going to debit, what are we going to debit? The expense, because we rented office expense. The debit's going to be office expense. Now note that everything down here is in blue, and the numbers here, these are also part of, in terms of the accounting equation, the equity account. Why? Because we're going to close these out to equity. So anything that's affected here, we could just assume is going to ultimately be part of the equity account. So I'm going to make that assumption here. All expenses are going to be part of the equity account in the end of the game. So we've got 2005 cash for rent. In terms of total equity that's going to be in the capital account at the end, we're going to debit 25. So as far as total equity goes, we got to credit this plus this minus this. And that in our taskbar gives us the 132.5 right there. All right, so then the next one says that we have the company received 21,000 cash for repair services provided during March. So we did work and we did repair services. So we got cash. Cash is affected. We debit cash. And we're going to credit, in this case, revenue. Revenue is also down here. Revenue has a credit balance. We're going to credit it. And that's going to increase our total capital once we close it out to the capital account. So this is going to be a credit at the end of the day to basically the equity section. I'm going to make it a negative 21,000. And then we have the company paid $6,700 for salaries for the month. So is cash affected? Cash is going down. We're going to credit cash. We're going to debit salaries expense or wages expense. And that's an expense again. It's going to ultimately be part of capital. And therefore we're going to debit the T account for that amount being $6,700. Next one says the company provided $3,500 of services to customers on account. So we did work on account. And therefore, we didn't get cash. What we got is accounts receivable. So accounts receivable is going up. It's also an asset. It goes up with a debit. And we're going to credit revenue again because we earned it. We earned revenue. And all these blue areas is going to ultimately be part of the equity section. Therefore, we're going to say credit 3.5 to the equity section. Then the next one, I'm going to start making these different colors so I don't miss one. The company paid cash of $1,000 for monthly utilities. So is cash affected? Yeah, it's going down. We're going to credit cash and we're going to debit what? Utilities expense. That's an expense. It's going to be debited, and therefore we're going to ultimately debit, in this case, the equity section being for $1,000. And then we have the company received $3,600 cash in advance of providing repairs to a customer. So is cash affected? Yeah, we received cash. Cash is going up. What's the credit going to be? You might think revenue. However, it says we didn't do the work yet. We didn't do the work yet, and we cannot claim revenue under the revenue recognition principle until we do the work. Therefore, we're going to have to put it into the unearned revenue. So there's going to be no effect from this transaction on our equity in any of the blue accounts down here. So no effect on that one. So I did that one. And then the last one said the owner withdrew $5,500 for his personal use. So is cash affected? Yeah, cash is going down. Cash is a debit. We're going to credit cash. And then we're going to debit what? Draws, which is part of the equity. It's going to be closed out to capital at the end of the day. So we're going to say that draws is going to be the debit there, 5.5. And so in terms of total equity, we include all the expenses and income accounts, and because those will ultimately be closed out to equity. And then if we do our balance in our T accounts here, we're going to balance this out. We're going to sum up the debits, or all of these, and sum up the credits. This is obviously a very longer multiple choice question, so sum up the credits. And then the credits are going to win, hopefully, because we have a credit balance in our equity. So the 159.5 minus 15.7 is the 143.8. Now note that you could have a running balance if you're able to use Excel and something like this. The T account's great by hand, but if you're able to use Excel, you might want to just have a running balance, and that would be the debits minus the credits, and you can see what happens after each transaction. So this is our running balance. We had 30. And then I'm just going to say plus, and I can just sum these up. Plus the sum of the debit and the credit. Why debit and credit? I have a sum because I put the credits in there as a negative. That's why, to me, it helps to make a negative for the formula. and it's going to say, yeah, I want to wrap that up. And then if I copy that down, I can see what happens as we go down, and we should come up to the same number here. And that's a nice feature to have available when you're using the computer. Next one says company paid $780 cash for utilities for the current month. Given the choices below, determine the general journal entry that the company will make to record this transaction. All right, so this is pretty straightforward journal entry. We're going to have a debit and a credit, of course. Debit and a credit. Again, if it's a multiple choice credit, if it's a multiple choice problem, you want to write down the debit and credit, write down the entire journal entry, even if they only ask for half of it, even if they don't even give you the number, then write it down, because it'll help you get the debits and credits correct in the right way. I usually say, is cash affected first? And if it is, it's a lot easier to know whether it's being debited or credited. And in this case, we paid cash. Therefore, cash is a debit balance. We're going to make it go down, doing the opposite thing to it, which is a credit. So we're going to credit cash. And that's going to be, I'm going to make it a negative, 780 for my purposes. You don't have to. And I'm going to debit something. What will the debit go to? Well, we paid the utility. And we just got the bill, so it's for the same month. So there's no kind of tricky timing thing here. It's just going to be straight utilities expense. Utilities has a debit balance. We're going to do the same thing to it, which in this case is another debit. So we'll just debit the utility expense. So whatever question a multiple choice question could ask you about this, they can say, what happens to net income? It would go down because expenses went up. And then what happened to assets? They can give you half of the journal entry. And no matter what type of a multiple choice question it is, you want to write down the journal entry first. Write it down, and then hopefully have a trial balance if you're able to. And you can then figure out what happens to different areas after it's written down. Next one says, owner contributed $74,000 in cash and land worth $138,000 to open a new business. General journal entries will company make to record this. So a pretty straightforward one. Again, we're trying to make a journal entry. Now this one's a little bit tricky because it's going to be a bit longer journal. It's not going to have just two accounts, is what I mean in that. So the owner contributed $74,000 in cash. So that's pretty straightforward. Is cash affected? Yeah, cash is going to go up on the business side. Cash is a debit. Therefore, we're going to make it go up by doing the same thing to it, which is another debit. So we're going to debit cash. And then we're going to credit. We also, let's think about the second thing. We also put in land. So land, also an asset. It's an asset up here, has a debit balance. We put more into the company, therefore it needs to go up. We're going to make it go up by doing the same thing to it, which is another debit. So we're going to debit land as well. And that's going to be for the 74 and then the land 138. And then we got to think about, well, who put it in there? The owner put it in there. And we represent, that means that they owe it back to the owner. The company owes it back to the owner. And we represent the owner's account called the capital account. So the capital account, again, it's kind of like a liability in that it's a credit balance. And it's going to be the 74 and the 138. It's what the company owes to somebody. In this case, that's somebody being the owner. And we're going to sum this up and say this is the negative sum. I'm going to make it a negative of that. So the 74 and the 138 add up to the 212. That's going to be the credit. Now, if it's confusing for you to see that it's one journal entry here, you could think about this in terms of two separate journal entries and then kind of combine them, right? I mean, what really happens is we can think about cash, 74,000, and then we credit something. What are we going to credit? We're going to credit the owner capital account. So you could think about it, there's one half of the journal entry, right? That's what this one transaction happened. And then you could say, okay, the second thing that happened is land went up. And land went up by 138. Who put it in? Again, debit, credit, the owner. And so you could kind of try to piecemeal it into two journal entries, which basically do the same thing. Obviously, the answer, and this wouldn't be wrong, note. This wouldn't be wrong if it helps you to think through it. That's fine. Note that the answer, of course, will be in one journal entry generally. And this wouldn't be wrong in real life because it would come up to the same result. And if it gives you an audit trail, that'd be fine. But of course, in a multiple choice question, it's probably going to be in this format. And therefore, you just got to recognize, well, okay, this capital account got hit twice. So here and here. So you could condense this down by combining that credit balance into, this journal entry here. Next one says, during the month of March, company made purchases on account totaling $44,500 Also, during the month of March, company paid 9.5 for a customer for services to be provided in the future and paid 37.4 of cash on accounts payable balance. If the balance in the accounts payable account at the beginning of March was 77.8, what is the balance in the accounts payable at the end of March? Okay, so we're looking at the accounts payable account here. So we're going to look at the accounts payable. So we're going to say, I'm going to put our T account here again. So I'm just going to call it AP for accounts payable. Hope that doesn't bother anyone. AP accounts payable on that. And then we're going to merge this. We're going to make our T account. So we're going to have our debit and we're going to have our credit. I'm going to make it look like a T in Excel in a bit just so we can say it's a T. So we like to say it's a T. It's a general ledger account basically. We're looking at a general ledger type of account that we will make look like a T here and therefore call it a T account in shorthand. And note that they gave us the ending balance or the beginning balance here at the bottom. We say it's starting at the beginning balance of this 77.8. Now the first question is, well, is it a debit or credit balance? If we're going to use a T account, we got to ask that. And in this case, it's going to be a credit balance. Why? Because if we look at our cheat sheet here, if we look at our payable, it's got brackets in this case, and that in my worksheets that represents that it's got a credit balance on the credit side in this case. So I'm going to put a negative credit of 77.8. That's the beginning balance. So now we can see what happened during the year. What other information did they give us in this case? So during the month, the company made purchases on account of 44.5. So we purchased stuff on account, kind of like on a credit card. So we got stuff like supplies or like expenses or some good stuff. And those are assets or expenses, and they have debit balances. So we debit that, and we credited then the liability. So that means that we're going to credit increasing the liability for 44. I'm going to make it a negative. My credits are going to be negative. And this is us purchasing. Purchases. All right. Company was, and then the company was paid 9.5 by customers for services to be provided in the future and paid 37.4 in cash on its accounts payable. Okay, so this is a bit tricky because this first one says the company was paid 9.5 by customers for services. So does that affect accounts payable? No, it's going to be a debit to cash and a credit to accounts receivable. So they're trying to kind of get us mixed up between the payable and the receivable. The receivable is what the customers are going to pay off what they owe to us, so it doesn't affect the payable, which is what we're looking at here. So by customers for services to be provided in the future, and then we paid apparently 37.4 of cash on its accounts payable. So this is what we paid down, kind of like the part of us that's paying down our credit card. So, and that would be, or that's how you kind of think of it. So we have accounts payable has a credit. We paid it. So cash would be going down. So we would credit cash. Then we would debit the payable, making it go down because it has a credit balance because it's a payable, it's a liability, it's going to go down. So we're going to say that that's going to be 37.4. So if the balance in the accounts payable was 77.8, what is the balance at the end? So they actually gave us it in order this time. They didn't ask us to back into the beginning balance like we've seen in the past. We actually did it in the right order, which is kind of nice, although they threw in that trick with the AR thing. So let's add this up. So now we have the balance here, and we're going to have total debits and total credits. So I'm going to underline this and add up the debits and credits. So the total debits, if we sum this up, is going to be obviously the 37.4. Some of the credits is the 77.8 plus the 44.5. And then how much are the credits going to win by? Because they're going to win. They're going to win by this minus, which is a plus the negative kind of the 84.9. So that's what we have. Now again, if you're doing this in Excel, you might want to do a running balance. It's just a good practice to do, and you have to set it up. The first balance would be just this minus this, and notice it's going to be a subtraction if you put credits as negatives in Excel. And then the second one, you have to say this plus the sum of the debits and credits, because it's going to be the debits positive, credits negative, and that'll give you, it's going to want brackets around it. And then you could just copy that formula down for however long the T account is. It only goes down to here in this case, and then we see the balance. So here's the balance, and of course that balance ties out to this balance, and we are in balance.